Yo, welcome back to Paid in Full Financial. If you hadn't subscribed to my channel yet, please subscribe, smash the like button, and comment below if you want to leave a comment on this video. So today, I want to get into, actually it's a piggyback off the last video I did, stock investing for beginners. So if you hadn't watched that video, I advise you to go back and watch it. It's a good video for people who just getting into the stock market and want to understand some of the basics and some of the basic lingo that we use in the financial world. So go back and watch that if you hadn't watched it. But before I get into the content that I want to talk about today, I just want to put out there that it's very, very important before you start investing to really understand what type of investor are you, right? What type of investor are you? That's really, really important because it'll keep you safe and it won't allow you to do dumb things when presented those opportunities. So I want to talk a little bit about what type of investor I am, right? So I'm considered what I would call a value investor, which means I look at stocks or businesses. I break down those businesses, financials, right? And I understand what price point I should pay for that particular stock. Now, what I do is I don't go out and just buy the stock. I wait until the stock fall to the price that I want or below. Then I go out and buy the stock, right? So I hold money until the stock gets to the price that I want, then I buy it. So that's what you call a value investor, right? So you have different types of investors out there. You have people that just invest in dividends. If you don't know what a dividend is, please, again, go watch my last video. I explained it there. So you have dividend investors, right? You have people who do stock options, right? Who just trade options all day. So that's a different type of investor, right? I don't trade options. I don't advise you to trade options unless you know how to invest in stocks. But yeah, you have option traders. So you really need to understand what type of investor you are before you invest, and stay true to that. Because as soon as you deviate from what you do and what you're good at, that's when problems happen, right? Just give you a quick example. I got a lot of people last week call me to say, hey, this AMC stock is going crazy, or this GameStop stock is going crazy. You going to jump in? And I took a look at the stock and I realized the stock is way overvalued, right? So then it goes back to, like I said, what type of investor are you? I just explained to you that I'm a value investor. So if a stock is overvalued, I'm not going to buy it. I don't care how high it's going. I'm not going to buy that stock. So when everyone's out there buying, GameStop stock and AMC stock, some people are making a lot of money, but a lot of people lost a lot of money. And I told a friend of mine, I think I told my brother too. I said, look, I'm not going to buy that stock. I guarantee you within 1 week that stock will be below $100 a share. And I think yesterday it dropped below $100 a share. So it's very important to understand what type of investor you are before you jump into the stock market game, because if not, it'll eat you alive. So I just wanted to start with that. So now let's jump into the content that I really want to get into. So stock investing for beginners, part 2. What I want to talk about today is my just basic strategy for how do I break down a stock. And to be honest, I don't want to call it a stock anymore. Let's use the word business. How do I break down a business, right? How do I look at a company? How do I understand if this company is going to make money in the long term? How do I look at their financials and come up with a price point to pay for that stock? So at a high level, I'll give you the 4 steps that I use to do that, right? So the first step you need to do is the type of product. You need to understand what type of product this business is, right? So when you're looking at a stock, what type of product? Do you believe in the product? Is the product going to be around for a long time? Is the product something that you need or that people need? Or is a product something that, something that's going to be around 12 months and then disappear? So it's very, very important that you understand the type of product you are invested in, right? That's the first thing. That's the first thing I do. What type of product is it? When people told me about AMC, I looked at it and I said, you know what? I like going to the movies, but long term, I think more people are streaming movies, right? I don't know if AMC is going to be around in 10, 15 years from now, right? People are going away from traditional going to the movie theaters and watching movies. So that's not something I'm interested in. So got to understand the type of product that you're interested in. And then the second, number two, is does the business that you want to invest in have a competitive advantage? What is their competitive advantage? Right? You look at Apple. Apple make great products, right? They have an iPhone. Then you have to buy the watch, the iPad, the Apple computer, the MacBook. I mean, all of that, and it's all tied and it all talks to each other, right? So they have a competitive advantage for families that buy Apple. So what is a competitive advantage? And I use something to break that down even further. I use what they call a SWOT analysis, right? Strengths, weaknesses, opportunities, and threats. So I take a business and I look at, okay, what are the strengths of this company? What are the weaknesses of the company? I list those out. Opportunities for growth. What are the opportunities? And then what are their external threats? Are there companies out there that's looking to overtake them, that can't overtake them because their competitive advantage isn't strong enough? So we really got to understand the competitive advantage of a business. Okay. Number three is very, very critical. Very critical, right? It is the management team. So you got to understand the management team of the business you're looking to invest in, right? A management team can make or break a company. I think yesterday it was announced that Jeff Bezos, right, Amazon is stepping down. So it'll be interesting to watch that stock and watch how it moves, over the next 5-6 months. I'll be tuned in because that's a big announcement. So you got to understand the management team. When I say management team, you got to go look at the CEO who's running the business, right? Understand his track record. Does he have a track record of running great companies? The longevity of the CEO, how long has he been in that seat? And have he been making money and producing results? And then the people that report directly to him, right? The chief operating officer, COO, CFOs, chief financial officers, right? All this information is available on company websites. So you can go and research the management team, right? So that's critical. So far, 3 things that I said. The first thing, the type of product, what type of product the company make. The second thing is the competitive advantage, right? What type of advantage does this business have? And the third thing is the management team. We got to understand the management team to understand if this is a good business long-term to invest in. Okay? So I do those 3 things even before I even look at the financials. I do those 3 things. And if those 3 things check out, guess what? The company goes on my watch list. I don't buy them yet, but they go on my watch list as companies to potentially buy. The last thing, the fourth thing I want to say is critical is the financials, right? So once you do those 3 things, you want to look at the financials of the company. Is the company healthy? Is the company making money? Does the company have cash? Does the company have a lot of debt, right? We got to start looking at those things. And there's 3, really, there's a lot of indicators you can look at to understand that. But there's really 3 key things that I look at when I'm looking at the financials of a company. A quick and dirty way you can do to see if the stock is a good stock or if it's overpriced or not is to look at the call it PE ratio. Right? The PE ratio. And that you can find that when you go and look at the price of the stock, you can find what the PE ratio is. So usually I look at that, and if it's above $20, you start to see that's kind of a high PE ratio, which means that the stock is overpriced a little bit. Not saying it's a bad thing, and it's not a bad buy, but it could be overpriced, right? A lot of your tech stocks have high PE ratios, which means that their price to earnings, sorry, I should explain that, price to earnings ratio. So I mean that the price of the stock is far more than what the company is earning every year. So a lot of the new tech companies, right, like your Tesla, will have really high PE values because the company, if you look at it on a yearly basis, you look at their financials, they're not making that much money, but the stock price is really, really high. So that's a company that may potentially for high growth, right? Low PE ratios, typically low growth companies, but good value in a stock. So that's a good indicator. Second indicator I will look at is price to I said PE, earnings per share. Right, so earnings per share go into your PE ratio, but what is the company earning per share of stock? So EPS. And then the third thing is cash flow. Cash flow is very, very important, right? Cash flow is the money that flows through the company, that is not really tied to anything, right? The company has paid off their debts, paid everything back, and then they have money, and they can either do two things with. They can either pay to investors in the form of a dividend, or they can reinvest back into their business and continue to grow their business, which is really good for investors because as the business grows, the stock price goes up and you make money. So those are three key indicators I look at when I look at the financials, which is earnings per share, price to earnings ratio, and then the cash flow. Okay. So I'll do another video and I'll really get into break those three things down, and I'll show you how to calculate cash flow, looking at balance sheets and looking at operating cash flow statements. So I'll show you how to calculate those. But it's kind of long, so I won't do that in this video. But I just wanted to give you a flavor of the four things that I look at when I'm looking to buy a business or stock, right? So let me recap. The first thing I look at is the type of product. What type of product do they make? Is the product going to be around 10 years? Is it something that someone needs? The next thing is the competitive advantage. How competitive is this company and this product? All right, is there someone out there that can come in and overtake this product, in the next 2, 3, 4 years? Right, so we got to understand that. Right, the third thing is the management structure. How strong is the management team that's in place? And I'll do a video on that too to show you how to research the management team of a business. And then the fourth thing is getting into the financials, understanding, is this company a strong company, right? Are they cash flowing? Do they have a lot of debt? To really understand if the stock is a good stock or not. So I just wanted to leave you with that. And again, if you like this video, please subscribe to my channel, help me grow the channel. I've only been doing this for a couple of weeks now, so I'm still getting used to it, but please help me grow it. Leave a comment below if there's some content you want to see me talk about. Leave a comment and I'll do that. And then that's it. That's all I got. Until the next one, peace.